Yes, it is that time again for our sophisticated feature. It's Shares with Cher, where my friends from Wizard Capital Management tell me what I should be investing in, and then I share that with you. And as regulars, you'll know I have a virtual online account, and each week, as well as new stocks, we look at what I'm doing, how I'm doing it, and whether I'm going to be a fat cat virtually or in the gutter with some diamond white lightning. And I'm pleased to say that at the moment my portfolio is running just over a 5% increase. And to add a twist to this week, I've got the guys from Wizard Capital with me. So welcome, guys. Justin and Sam, how are you doing?
Yeah, good, thanks, Paul.
Yeah, fine, thanks.
Excellent. Now, as you know, obviously I've been on one of your courses, the Wizard courses, as a complete novice, and I was absolutely amazed how simplistic it all was. I mean, you don't have to be some sort of mathematical genius, do you, to do this?
No, not at all, Paul. As you say, it's something that anyone can do. Really simple to pick up. Just people have a fear of taking control of their finances, and part of our aim is to encourage people to take more of an interest in their investments and look after their own finances. Even a small course, a one-day course like you came on, can be enough to give people the encouragement they need to take that step.
And obviously I've been on it, I've picked bits up off it. What would you expect people to pick up from the first day on the course?
Well, a big thing is confidence. People can look and analyse a series of stock and make an informed decision about where prices are likely to go. All our courses and training is based on price action and how prices behave. So when you look at the stock market, people's reaction to news and their perception of what's going to happen in the future is reflected on the price chart. And that's where we look at breakout points that we saw on the charts and things like that, where we can draw a conclusion about where prices are likely to go. So it's not about predicting the future. We don't have a crystal ball. We're just looking at high probability outcomes.
And you mentioned these pricing points. Are they called pivotal points or pricing points, or?
We call them VIPs, very important prices, and they're historical prices that a particular share may have reacted to in the past, and then we wait for that level to be tested again. We draw an expectation from how it reacted to that price point last time.
See, no wonder I get it wrong, because I can't even remember the name of it. But it's the chart. It was the charts and mapping the charts, which is quite a fascinating thing. And people generally don't think that they do stocks and shares when they really do, because when you invest in an ISA, for instance, all you're doing is asking the bank to invest for you. And obviously, who trusts the banks at the moment?
Yeah, indeed, Paul. Anyone really can do this, because it's something that people do most days of the week anyway. Looking at currently the price of petrol, you're trying to decide whether you should fill the car up today or whether you should fill it up at the end of the week. And it's just the same with stocks and shares. Going back to the banks, you can either give your money to the bank, and the bank will do that with your money anyway, or you can keep the money and put it into a trading account and buy stocks and shares. Make your own decisions and take control of your own money.
Because I was trying to find a good analogy about it, about giving you money. Why would you give your money to the banks to do that when you could do that? Would you do that with your shopping? Do you phone up Tesco and go, oh, just go and buy me this? I mean, some people do. That's what they do when they do an online shop, is they trust them to go around the store. Well, of course, a lot of the time they'll buy the stuff that they want you to have, as opposed to the stuff that you would do if you went shopping.
Yeah, indeed. And nobody's going to take better control of your money than yourself. And a lot of it also comes down to risk. When you put your money with the bank, it's allegedly safe. Bank then risks your money by trading. And if you have an understanding of how to trade, you can manage your own risk and do it yourself. And it's never, with modern computers, it's never been easier to trade than it is today.
And of course, they're not that bothered if certain stocks start to go down, whereas you can control that because you can bail them out and reinvest them in different things, because you're actually looking at it full time. Whereas they obviously got thousands and millions of ISAs and stocks to control for various, for their clients.
Yeah. Yeah, indeed. And, as we always say, and as I've said already before, nobody takes better control of your money than you do. And that's been reflected in this exercise we've done with you here at Imagine FM, where in, less than a month, you'd made more with your money than you would have done all year with it in a bank account.
Yes, very excited about that. I'm looking at my virtual account at the moment, and I'm rolling in it. So about 5.5% up there. I think I've got about six or £700 in only a matter of weeks. As I say, this is virtual money, so I won't be spending that very quickly. But I mean, just sort of looking at some of the stocks that we've done and the shares that we've done, and sort of track one of those backwards, because we've had some good winners, I think, over the last couple of weeks. What makes you, I know there's lots of pointers to make you pick those particular shares. You're looking at them, you're working through them. Let's have a look at one of them, and if you can talk us through the journey on one of those, perhaps.
If we take Debenhams, we can see that historically the price has reacted to this particular level, and it bounced away from it and the share price fell. Well, we were in the situation about 2 weeks ago where the prices were retesting that price point. We expect then to see a breakthrough. Now, in times of recession and hardship that we're going through, we wouldn't think that a high street retailer would be a very, call it for want of a better word, a safe bet. But we can only go by the technical analysis and looking at the charts. So that's what we make our decision from. And it's about finding the highest probability of a favourable outcome. If we buy something at £1 and it behaves the way we've expected it behave, i.e. the price starts going up, then we look after it and we nurture it as an investment. If it starts misbehaving and moving against us, then we close it. Sometimes, yes, we lose money. Some of the shares in our portfolio are down and they are losing us money, but overall we're up, as you say, 5-6% in just a few weeks. As time goes on, some of those trades that are currently making money and are in profit may start to come back, and we'll get rid of them. And it's about finding and pushing the trades that are winning and making you profits. That is the key to making money in the long term. People could say, throwing darts at a board, but if you can manage your money and manage your risk, then you can succeed, and it's not that difficult. And hopefully over the next few months we can show a consistent return.
And I think one of the things that you guys have said is a lot of people sort of have hereditary shares, so things that a grandfather might have worked at a power company, or the good example is things like Tesco's, for example. We put Tesco's in the other week, and you say, well, it's time to sell that, and then if it drops, it should drop past a certain point, and then we buy it. We might pick it up again and put it back in, and it's treating that share not like it's a family heirloom. Really, it's like it's a commodity. Is that right?
Yeah, absolutely, Paul. So many people have shares and they have an emotional attachment to them, which, let's look at it just standing from the sidelines. You've got an emotional attachment with a piece of paper, and that's it. That's all it is. It's a piece of paper. It's numbers on a piece of paper. And in fact, we've had one client with us just recently who has had Glaxo shares handed down generation after generation after generation, and having been on one of the courses with us, she decided to sell them and buy them back at a much lower price when the shares hit that price point. So she's removed her money. Those shares will get to that price point at some stage in the future, and at which point she'll buy them back, having lifted a load of money out of that investment.
By that point, she might have identified other shares that are much more exciting, much more interesting, and might give her a bigger return on.
Yeah.
So she's actually actively trading.
Yeah, and it really doesn't take, once you've done your homework and done your research on the shares that you're sort of looking at on a daily or weekly basis, it really doesn't need to take any more than 5 or 10 minutes of your time for you to be actively managing your own investments.
Excellent. So the courses you guys run, it's not just the novice course like the one I was on. What else do you have there at Wizard?
Obviously we do the course that you came on, right through to what we class our Pro Trader course, which will take you from knowing next to nothing about trading right through to being able to trade professionally for a living. And we're seeing good take up on that course at the moment, especially from people who are potentially looking at being made redundant, or who have been made redundant from the workplace, where they've got a small to medium amount of money, which will enable them to come on the course, get set up, and have money to trade with. And we've got, certainly I'm thinking of one or two clients looking sideways at Sam here, who have who are in that process at the moment and are trading, they're in their early days of trading, but they're already making consistent profits, which is what it's all about.
Yeah, we had one guy was up 15% last month, I think. Was it?
Yeah.
So.
Fabulous. And so finally, how can people find out more about the courses from Wizard Capital Management?
As always, check out the website, wizardcapitalmanagement.com, and all the information's on there. There's blogs, follow us on Twitter, Facebook, etc., all the usual social media networks. Twitter's a particularly good one because we quite regularly tweet the trades that we're about to take just as we're taking them, which allows you to follow exactly what's happening on a very up-to-date basis.
And I will be as well. Well, Sam and Justin from Wizard Capital Management, thank you very much for coming in this afternoon.
Thank you.
I hope I will continue to do you proud. And, of course, if you're wondering why this is called Shares with Cher, well, here's Cher.